please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's focus a bit on Tata Motors. That's clearly the top loser today on reports that of JLR cutting jobs at its UK plant. To discuss this in greater detail, we're now joined by Ashwin Patil, the research analyst at LKP Securities. Ashwin, would you tie this news in with a weakening demand, say, for JLR products? Because the recent JLR retail numbers for the month of March were quite disappointing, with just a growth of close to about 8% in the month of March. So would you, how would you read this news of jobs cut at JLR plant in UK?
See, we need to talk about, country-specific things, just like how it is happening in the UK markets. We know that there is a lot of slowdown, Brexit effect is there, and also some regulatory impositions on diesel vehicles have been laid. So these factors are already leading UK to put not so good kind of growth. If we see UK in the first 3 months, JLR has reported a drop of about 26%. And also, if you see in Germany, which is Europe's biggest car market, it has also slumped by about 32% in the same period. So we are seeing that a negative impact is, overall there in the European and the UK markets. And that's why, first of all, as I said, Brexit has led to a significant impact on the sales over there. Secondly, the government has laid, increase in excise duty on diesel vehicles, and diesel contributes about 90% of JLR vehicles and 38% of the overall industry. So if you consider these factors, then definitely the company, in order to save costs, or we may say cut costs, they will have to, they had to rather cut the employee cost of about 1,000 workers, which were on contract basis. So they have also said that maybe going forward, if things improve and as it is, their investment plan is quite in place, so they may recruit, engineers and all at higher levels, and they may get back things quite on track. So considering these factors, in order to maintain their profitability, they have taken this step.
Ashwin, this 4.5% cut on the stock that we are seeing, because a lot of what you're saying has been known for a while, right?
Yeah.
So what is,
I think, yes, these things are known, but when it comes to reality, the company themselves, these news are there in the market. We know that Tata's JLR sales are slumping and all. But when it comes to reality, it actually hurts the stock, because we know that the company has taken steps towards cutting costs and all. But the thing is that the street, they themselves cannot gauge the pulse of what exactly is happening on the dealer side, and the ground level reality we do not get from companies which are based out of export markets. So when it happens from the company's end, that gives a clear signal to us that definitely there is something going wrong on that part. So hence the stock has quite reacted.
The only reason I asked you that is because usually markets take cost rationalization moves positively. It could be painful, across industries. Usually when that kind of news comes, it's... but of course, unless you're saying that the underlying is now being confirmed, that demand is weak, the news confirms that fact. Yeah.
That's what I said. The route is quite clear. Right. If the company is just doing it because of, cost rationalization, or maybe RM prices are moving up, then it's quite understandable. But when the demand itself falters, the company, when they take such price cuts, definitely there is something to, a matter of concern. And therefore, one definitely looks at what the reason is for cost cutting. So if it's a weak or a negative reason, then definitely the stock will be reacting like this.
So does 340 in terms of the stock price today of Tata Motors adequately capture all the risks?
See, the stock has reacted quite a lot over the past few months. It has not even participated in the rally that we have seen in FY18. And, well, at this point in time also, there is some sort of risk, because we know that the numbers in UK are not coming good. Even in US, there is some sort of slowdown in Europe also. So 3 major geographies which contribute about 60% or more than that, is that slight kind of, we can say, a risk. But on the other hand, China is doing well. Rest of the geographies are doing well. But overall, I mean, the home countries of this particular company, that is JLR, are not doing good, and that is one of the matter of concern. We may see some slight downside from these levels also if any other negative news comes. But on a long-term basis, I think it will be giving us an opportunity to buy into.
Okay, just one last question, and this is not about Tata Motors. We get the monsoon forecast today, the first from the Met, and we've been hearing chatter that if it's a decent forecast, it could support agri-related stocks, tractor companies, etc. Any thoughts in light of the performance they've already had in that part of the market?
See, this news we generally see every year in the months of March, April, May, etc. Till the monsoon hits the country, and after that again there is a change in estimates and also prima facie when such estimates come initially during the first rounds. I think that definitely the market reacts positively. All these pharma stocks, the agri stocks and the farm income related stocks, all these definitely do well. Just companies like Mahindra and Mahindra, Eicher, Escorts. So these companies, also the fertilizer stocks and all, they start reacting positively. But once the actual monsoon comes and hits the shores of Kerala and then comes forward, then only we'll be able to say that definitely what should we expect from the monsoons in a particular year.